Welcome to Drill Down Earnings. We have quarterly results right now from Arista Net, that powerful maker of networking equipment here in Silicon Valley. This is the business story behind One Stock on the Move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. Q3 earnings here, and better than what Wall Street had expected. $1.81 billion in revenues, and $2.40 in non-GAAP numbers are well above what Wall Street expected, and yet the stock was selling off. So let's dig into why. This was more than just a beat or a miss, because it was a beat, but the stock went down. So we look at the growth, really consistent growth from this company. I mean, a year ago they were doing $1.5 billion in revenues. Now it's $1.8 billion. So really fantastic growth on a year-over-year basis for third quarter results, with some nice gross margins, some really nice operating profit margins of 49%. I mean, my goodness. What a profitable business. And those margins keep getting better every quarter. Now, this is a big moment for a company where so many people came from Cisco to build this business. They have had Cisco's had a target on its backs from the people at Arista Net for so long. Arista is the record label. Arista Networks is the company in Silicon Valley. So they're looking at Cisco. They're looking at what percentage of Ethernet ports they have out in the world, according to market researchers out there. And this was the quarter where they finally really significantly got ahead of Cisco, with, according to them, 30.9% of the Ethernet ports out there, in the high-speed Ethernet ports, compared to 21.2% for Cisco. They also seem to be managing their inventory quite well. They gave us some inventory numbers that suggest they're doing 1.1 inventory turns every single quarter. That means they're not sitting on a lot of stuff, because technology changes so fast. The last thing you can do in your tech company is have old equipment sitting on the shelves unsold, because the new equipment is going to be so much better. No one wants the old stuff. Nonetheless, stock was down 8% in after-hours trading after 103% gain for the year. Maybe it wasn't enough of a beat and raise, but they talked a lot about in the conference call and in the press release and other investor documents. The company talked about this move from 400 gigabyte per second Ethernet to 800 and even 1.6 somewhere out there in the future. It's a hotly debated issue about what's happening in the enterprise. Is the enterprise really moving to 800? Are they really going to see some 1.6 maybe in the next 6 months? Or maybe the next 12. We've heard different things. We talked about Fabrinet earlier in the week when they're talking about the speeds they're seeing. And we talked about Coherent earlier yesterday. And that's a company that says that they're seeing some stuff that's going to be more delayed than what Fabrinet had to say. These guys are saying really 1.6 in size, not until 2027 and 2028. Nonetheless, in terms of their visibility, the CEO, Jayshree Ullal, talked about what they're seeing right now and how they can't see too far into the future.
As you know, our visibility only extends to roughly about 6 months, right? So we don't want to get ahead of ourselves on how much better we can do in 2025. And that's kind of how we started 2024 either. And we were pleasantly surprised with the faster acceleration of AI pilots in 2024. So we definitely see that our large cloud customers are continuing to refresh on the cloud, but are pivoting very aggressively to AI. So it wouldn't surprise me if we grow faster in AI and faster in campus and the new center markets, and slower in our classic markets, called that data center and cloud. And this is the best we can see right now. Doesn't mean we couldn't do better or worse. But as far as our visibility goes, I think this represents a nice combination of all our different customer segments and all our different product sectors.
So Jayshree Ullal, pretty positive about what's going on out there in the world, and really seeing AI leading to a whole new type of demand in the networking sector. All right, what's it all mean? Your big drill down earnings takeaway. So let's talk about these numbers. Q3 earnings from Arista Net, $1.8 billion in revenues. That's not the most important number here. The most important number here isn't even the 49% operating margins they put up. The most important number is 33.2%, because according to this company, that is the market share in terms of dollars they have in high-speed networking, finally topping Cisco. And many of the company, of course, at Arista Net are Cisco alumni. They're pretty happy popping some corks down in Silicon Valley. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.